Thank you, everyone. Welcome to our Deal Room webinar. Good morning from wherever you are. I believe we are all in the morning hours at this moment in time. My name's Daniel Njiwa. I head the Regional Food Trade and Resilience Program at AGRA, which is funded by the FCDO, UK government. I'll be your moderator today. Talking to a number of experts that we have in the room about, how do we unlock the Africa Continental Free Trade Area trade opportunities for our SMEs in the continent through innovative financial solutions and business models. But before perhaps I give a few opening remarks from my end, let me introduce to you the panel that I have with me today. To start with, I have Madam Atsuko Toda. She will put her video on. She's the Director for Agriculture, Finance and Rural Infrastructure at the Africa Development Bank. She brings over 20 years experience working in the sector, but also has been working with the UN Specialized Agency, the International Fund for Agriculture Development. The second panelist I have for you today is Mrs. Elizabeth Ochoa. She is a business banking director from ABSA Bank based in Kenya. She also has a lot of experience in the banking sector, working with tier 1 banks, 25 years, but also she's a champion of women in business promotion in the banking sector. The third panelist that I bring to you today is Mrs. Rose Mutuku. She is the managing director and founder of Smart Logistics Solution in Kenya. She has experience working in the private manufacturing industry, but also in the public service. The fourth is Madam Eva Maron. She is an administrator and board member of the World Union of Wholesale Markets. She brings 15 years of major European financial institutions advising institutional clients, but also high net worth families in the world globally. She has worked with the Deutsche Bank, but also other, European banks out there. I also want to bring you our gentleman, Mr. Temi Tope Jebutu. He is the managing director for AACE Foods, based in Nigeria, and has about 17 years of experience in operations management, working with multinational and international organizations. Prior to returning to Nigeria, he has been working elsewhere and has experience in Canada with McDonald's, as well as Sakai Spice. Our second gentleman in the panel is Mr. Chifuniro Kaimapanjira. He is the Chief Operating Officer for Export Development Fund in Malawi. He is a trade and development finance expert, but also a seasoned chartered accountant and qualified chartered banker. Lastly, but not least, Madam Vanessa Adams. She is the Vice President of AGRA, responsible for strategic partnerships. Welcome, Madam Vanessa. She will be giving us closing remarks for our session today. That's it from our introductions on the panels. I just wanted to share with us a few, highlights of what we will be discussing today. So our session will run for about 45-50 minutes, and we will be engaging with these panelists who are representing financial institutions, but also businesses, to understand what are the opportunities, what are the business models that are out there, that SMEs could tap in order to access financing for trade. You will agree with me that at this point in time, trade is really very important for the continent, not only because it brings income to our economies, but it is also considered really a major activity that contributes to food security. As I am speaking to you today, Africa is importing over 40 billion worth of food from global markets. This is food, or this is an opportunity, a volume of trade that we can internally generate. We can produce and we can trade amongst each other. We also know that increases in trade helps with jobs, helps with building the economies. Estimates that we're looking at now show that an increase of 1% in trade by Africa in the global space will actually increase our income up to 70 billion, which is almost 3 times what we receive as official development assistance from the world or from our partners. If we can do this, it means that we will lower the burden that our economies have in relying on financial support from other players. But why are we not performing very well? Our businesses are small. Our businesses are tiny. They lack the capabilities, but also they have difficulties to access the needed financing for them to operate better. We know that 60 to 80% of the food that we consume is actually produced or traded and handled by small and medium enterprises. If we don't support these businesses, we risk our economy or our continent falling back into food insecurity. So the aim of this session today is to see how do we support these SMEs to function better? How do we help them to access the needed financing? And in the economies that we operate, largely informal and small, disintegrated, and sometimes disconnected. And what are the solutions that are out there? I think our panelists today are experts that are going to help us understand how we can do this better. And we should all be very excited to listen in and participate. There's a chat box which is open to everyone, where you can throw in your questions, your comments, but also any resources that any of us could use in order to enhance and enrich our discussions today. At this moment, I would like to ask the director, Madam Mutuku from the Africa Development Bank, to give us a keynote address, opening us and launching this session today. Over to you, Madam Mutuku.
Thank you so much, Daniel, and thank you so much, AGRA, for organizing this session. First of all, I'd like to congratulate Daniel for putting such an interesting panel together. So it is an honor and privilege to be speaking with the panel. And also, I'd like to really appreciate the opportunity to discuss the issue of SMEs and the African Continental Free Trade Agreement, because I do believe that these are two of the key pillars when it comes to the African agricultural transformation and the food system transformation that we're talking about. I'm especially happy that there are so many women on this panel, without marginalizing our men friends, of course. It's just that when we talk about SMEs, women in Africa are starting businesses at a faster rate than men. Interesting statistics include that they own 30% of all registered small and medium businesses and account for 70% of the informal trade within Africa. So when it comes to this topic, I think this panel really is going to be extremely interesting. Daniel already mentioned some of the things when it comes to the African Continental Free Trade Agreement. There are growing market opportunities to feed African cities. He told us about the import bill, and this is something where we have identified markets that SMEs can crowd in. SMEs remain much underserved and least listened to, yet one of the most important segments of the economy. SMEs can diversify an economy's economic base, promote innovations. They are a powerful force for integrating youth also, which is extremely important when it comes to jobs creation. But part of the reason that agri-SMEs do not have access to finance is because of the significantly higher transaction costs, the smaller ticket, the fact that they're greenfield, much more difficult reporting requirements. So for financial intermediaries and DFIs like ourselves, it is actually quite difficult with regards to promoting SMEs, yet they are the future. And the African Continental Free Trade Agreement is the future market. So we have looked at the financial landscape and we've identified financial intermediaries that can reach SMEs. And there are certain buckets of these financial intermediaries that include social lenders and impact funds, some private equity funds, commercial and public development banks as a second bucket. And also when it comes to value chain financing, larger agribusinesses with business models that demonstrably support SMEs as part of an ecosystem. So if you look at these three buckets for DFIs like the African Development Bank, we must catalyze financing to these financial intermediaries that can reach these SMEs. We must, as DFIs, catalyze blended finance and develop de-risking mechanisms for these financial intermediaries, as they are key to scale access to finance for agri-SMEs. Where systematic or perceived risk serves as a substantial barrier, we must use more blended finance instruments. I think that is absolutely key to discuss with the development landscape. For the African Development Bank, we are designing 2 facilities currently with regards to SMEs. These are the Agri-SME Catalytic Financing Mechanisms and the Facility for Agricultural Finance in Africa. We plan to partner with a number of players, including AGRA, including IFAD, a number of players that are extremely important to ensure that the financial intermediaries that I spoke about can really reach out to SMEs and take advantage of this growing market on the African continent. Thank you so much, Daniel, and over to the other speakers. Thank you so very much for this opportunity.
Thank you, Director Tsuko. That's very, very encouraging to hear from you, but also to hear the sort of models that are out there, to help, catalyze financing, de-risk, businesses so that they're able to, reach out to these SMEs that are really in big numbers serving our continent. At this point, I guess I want to bring in an SME experience, and I'm looking at you, Madam Rose Mutuku, as a woman leader of a business that is really doing very well in Kenya and in the ag sector. Can you tell us about your experience, accessing these financial services that Director Toda Tsuko has mentioned, and maybe others that have not been mentioned? What is your experience? How easy is it to access financing?
Thank you. As you've heard, my name is Rose Mutuku, and I run an SME in Kenya that started from aggregation of products from farmers and went ahead to start processing of the same into the market. So we have a wealth of experience working at the agribusiness sector for the last 12 years. Coming back to your question, how easy is it? I can tell you it's not easy, especially when you're an SME. I'll give a small experience, just a very short one. I used to work for the East African breweries as a very senior manager. And that time, the banks were actually lining out of my office just to ask me to take a loan because I was earning a very good salary. So when I left, I knew banks are very friendly and they're going to be actually financing my business and my business idea. Then when I went out there, I found it was totally different. A bank can actually give your employee a loan based on their salary, but they cannot give the SME a loan to like a working capital to support even the workers. That is very interesting for me because it was a shocker in the beginning because I was wondering if I'm asked to guarantee my employee to get a loan, and then as an SME, I can't get the loan. What is happening? What is the disconnect? And I came to know a lot of disconnect. Actually, most of the institutions look at us like a high risk. They look at us like, you know, you're going tomorrow to actually fall over. You have no idea what you're doing and what you're talking about. That is one thing that we've seen. It is even worse when you're a woman, because, you know, they look at you like, really, as a woman, you're going to get this and you're going to buy Sukuma Wiki for your children, and by the end of the day, you'll not be able to pay back. Of course, that is all, you know, there's a lot of fear out there on SMEs. Because maybe of prior experiences, or just because they don't understand, especially agribusiness SMEs. We are lumped out like, okay, the rains will fall, and then you'll also fail with the rains. So those are things that as an SME I've experienced, and as a woman SME leader, then I've also experienced even worse than just a normal SME. Why is that, and what can we do about it? I think always, you know, I'm very happy to see when impact investors come in, they are more, you know, they are more stringent on you. We also have a lot of weaknesses as SMEs, of course. You know, initially, I could not even do a business plan, even with my master's, you know. Then sometimes I'll wonder, what about the ones who have not gone properly to school? How will they operate? The second thing is, you know, SME leaders should understand financial skills. I'm lucky I have some financial skills because I did my MBA in finance, but I still find a lot of challenge, even for the head of your finance team, just to give you what you want. So even our employees do not really understand. So they can even actually present for you a document that cannot sell out there. So it is a matter of skills, it's a matter of ensuring that the market understands exactly what you do and they believe in what you do. Because if the market lumps us together with the bigger companies, then we are in trouble because we are struggling to do a lot of things. And as you do that, you know, someone comes and tells you food quality. That time, if not, you don't even have a good processing unit. Someone comes and tells you about employee skills. There are so many things that you're supposed to do at the same time that hinders us to do this. So I believe that SMEs are the future. And if you hold the hands of SMEs, especially those who are very good ideas, we are going to see a big change in this world. Thank you.
Thank you, Madam Rose. That was really powerful. And you know, your narration of the challenges SMEs, not only just SMEs, but SMEs, you know, headed or led by women, you know, face uniquely different challenges. And this is something that we need to take note of. I wanted to flip the coin a bit and you know, talk to you, Madam Eva, and I like to hear if at all there's been some services that have worked with you or your members in your organization. You know, we know there are a lot of challenges, and I think Madam Rose has shared quite a bit, but can we flip the coin and look at the positive side? What is working? Where have you succeeded? And how have you succeeded? You know, what kind of financial services? And if possible, can we steer this, you know, towards trade facilitation? You know, the kind of financing you require, you know, to engage more in trade as an SME. And maybe Temitope could also speak to that after you, Eva. Over.
Okay. Good morning, everyone, and thank you for the invitation to join this remarkable platform that is the AGRA Summit. And I'm happy to participate, honored to participate and speak in this session. I'd like to share my perspective as Africa's chairperson for the World Union of Wholesale Markets and as a former banker myself. Yes, AfCFTA is indeed a formidable initiatives that will boost intra-African trade by 50% in the next decade and open a whole new level of opportunities for African SMEs. And we all know the figures represent 80% of Africa's businesses and 50% of its GDP. So any economic policy that facilitates imports, exports, free access to the market and market information, and also eliminates trade barrier is indeed very beneficial to SMEs. However, there are some conditions that must be met for SMEs to be able to unlock those opportunities and realize the potential offered by AfCFTA. So I'd like to just give a few elements of my experience regarding what we're talking here. It's about creating an environment that enables SMEs, and namely through provision of some essential financial services. There are direct and indirect financial support to SMEs. And in the terms of direct financial support, what we find difficult here is funding for growth and expansion. Of course, AfCFTA's main lever is market access, but traders and farmers need financial support to start doing businesses with other African countries. And one of the main challenges faced by SMEs is difficulty in accessing trade finance. As said Mrs. Mutuku, companies, SMEs in Africa are really faced with structural difficulties that range from lack of know-how in local banks to mistrust, resulting in those SMEs having to set aside large collateral requirements and high fees for any financing. And in fact, this is a general problem, and there is a consistent flow of information indicating that trade finance markets have remained characterized by greater selectivity in risk-taking and flight to quality. And this is a general problem, not only for agribusinesses, but all SMEs in Africa. And what I'd like to say is that, unfortunately, models that are used by banks to assess risk and to finance companies automatically somehow disqualify SMEs because they show a lack of credit worthiness or history, and because they have limited collateral guarantees. So there is this important gap in trade finance demand. Actually, according to African Development Bank, in a report on trade finance in Africa released a few years ago, the value for this unmet demand, conservative estimates, in Africa was of 120 billion US dollars a few years ago. And and one of the solutions that we see and that has helped to mitigate this is to create actually risk mitigation programs in African countries that help banks to de-risk and develop actually those de-risking mechanisms that will help them finance more SMEs. And this is a work actually Madam Toda has said, will know from AfDB. AfDB has actually opened this permanent program to facilitate trade finance and has already financed close to $4 billion in trade transactions in Africa, which is significant, but nowhere near the estimated gap of 120 billion US dollars. So it means indeed that DFI intervention is effective, is needed, but I think that local banks also have to pitch in and develop innovative risk mitigation solutions so that they can be able to provide more financing to SMEs. So this critical need to access trade finance is a key point. And specifically for agribusinesses, what we see is that they also need specific financial products that will give them access to private supply chain financing systems. They need, for example, warehouse financing, which is a lending technique that allows to extend working capital to small farmers and producers in food supply chains so that they can leverage their production. Also, they need financial products like supply chain products, which are aimed at providing short-term financing to exporters so that they can sell to other African companies on open account terms. And in addition of providing direct financial support to agribusinesses, what the SME also need is level of financial support, which is indirect. And the first one is investment to develop infrastructure in general, and market infrastructure in particular, because in order to achieve food security in Africa, we need to transform our food systems, and we need to do it now. This morning, just Senegal reported a record waste in onion production due to lack of storage infrastructure. I was hearing this in the news this morning. And the country produces 100,000 tons more than it needs, but it still imports because of a lack of storage facilities and food waste.
Yeah.
So it's very important, and there is this study currently underway on upgrading wholesale food markets for food system resilience in the 21st century, led by FAO Investment Center and our organization, the WOM, which will be presented at Food System Summits in September this year. And the study shows that main areas of development for wholesale food markets are indeed emerging countries, especially Africa, which suffers from lack of modern infrastructure. And Africa's cities will grow rapidly in the coming years. So developing new fresh food infrastructure in the region will be paramount. Wholesale markets are key infrastructures in the organization of such value chains. They provide safe access to local products at a fair price, securing food supplies for city and regions. So it's important to invest in developing those wholesale markets infrastructure. There is obviously more to be said on the topic, and I'm running out of time, so I'll just like to list a couple of us, just as food for thought. Financial support for research in the fresh food sector across the continent so that agribusinesses can make better data-driven decisions and produce what Africa needs. As you were saying, we need to produce what we consume, and also financial support for training programs and competence upgrading of SME managers to help them address banks and better unlock those opportunities. I'll leave it here. Thank you.
Please, thank you. I think that study is a very useful study. Could you share, if it's publicly available, you can throw it in the chat box so that people can look at it. But you brought out a number of interesting issues and reinforcing what Madam Rose had already mentioned. I think at this point, I'm looking at you, Temi, but I think I'll take a small detour because I need to hear from Elizabeth, especially on this claim. You see, models that are used by banks automatically disqualify SMEs. I'm quoting you, Eva. And I'm looking at Elizabeth. I'm saying, is this true? What is it that you're doing that is not as inclusive for our small SMEs? Or what is it that we need to start doing going forward in order to address this challenge specifically? Over to you, Elizabeth, and kindly use 1-2 minutes, and then we hear from Sme. Thank you.
Thank you, Daniel. And this is the challenge of having conversations like this, really interesting conversations where, then you're given 2 minutes to respond when you could take the whole day to respond. But thank you very much. I feel the conversations, that have taken place. I hear what Eva Marone has spoken about. I hear what Rose Mutuku spoke about, and we've seen this in our environment. It's not lost to us the fact that a lot of financial institutions have really left out SMEs for a very long time. But I think let me just give some encouragement to say that financial organizations have opened their minds and are opening their minds to conversations with SMEs. Now, my challenge, and I think this is the one thing that I would want to speak to a lot of the SMEs, is you must understand the language of banking, and we must also understand your language as SMEs. The conversations have to be both ways. We can't sit in our head offices as financial institutions and continue to think that we are going to craft things without the input of the SME. So I hear them from a point of SMEs first and foremost, and then even when you go into the women conversation, it gets worse because traditionally, we as a financial institutions have also looked at, based lending. We have looked at things in a really traditional way. We've not seen the inefficiencies of our environment, our cultures in enabling women to step forward and really be the force that they are in the environment that we work in. So I would really say that first and foremost, we must make sure that SMEs understand what being bankable means. And I think we must stop speaking in big terms and just come down to the level of an SME and have conversations. I have found with our conversations at Absa Bank in the last couple of years, when we go out to speak to the SMEs, understand where they are, understand where the shoe is pinching, understand what are the issues they have in the various areas that they find themselves operating in, letting them understand what it is that we're looking for. Then we find that we're bridging those gaps more and more because you come from a point of understanding. Where we find we cannot totally, encompass the risk, we're looking for partners. We're looking for partners who can help us de-risk the transaction and therefore being more inclusive. We've looked at things like supply chain management that, speaks to corporates being able to open their books or open their doors to SMEs and give them opportunities because banks like ourselves are willing to support the SMEs with financial support. So yes, there are ways. Are we at the very end of it? No, we've started the journey. But I think the encouragement to the financial institutions to note is that SMEs are the way to go. They are the way to go because they're sustainable. They form a huge amount of what we do in the business banking domain. So I, for one, all team SMEs, all team for them because we need to provide them support in terms of financial, but also non-financial. We must bridge the gap. So I think just in short, that would be my response, Daniel. There's light at the end of the tunnel for SMEs. So do not fear. We are ready to listen. And let's have engaged conversations.
Thank you, Elizabeth. I mean, you're doing well on time. I want to give you 30 more seconds. Could you please give us an example of an SME your bank has supported in trade finance, for example, where they were looking to export or import and they needed really this financial injection. How did that go and what was the process? Don't give me the UNGA or the ETG, which are big. Give me small business, that you have assisted, please, quickly.
Yeah. I'll give you an example that covers two of the elements that we've spoken to this morning. First, the SMEs and of course the women. So we've gone into having conversations with the large organizations who bank with us. So for instance, the Safaricom, the EABLs, and in there we found there were lots of SMEs, fighting for the opportunities to step forward and really perform. So we came into partnership with them under a program called ESD, which is a supply chain management program that we have at ABSA Bank Kenya. And when we spoke to these corporates that then house the SMEs, we found it very easy to support them because one, they have contracts. Yeah, and I'm only speaking about, Safaricom is one of them, then EABL, also the farmers in the EABL supply chain, because we now could see the transactions end to end. So what am I saying here? Over and above the fact that we have individual farmers, making them understand that you can organize yourself in a way that is attractive to the bank, to be able to mitigate the risks, to be able to understand the transactions end to end so that we can provide them with the necessary support. It's such a key thing. So in that, we've been able to support smaller SMEs to be able to finance them with working capital, to be able to supply them with letters of credit, to provide them with LPO financings, things that ordinarily, if you walked in, isn't such a, an interesting proposition, but under value chain, awesome.
Thank you so much, Elizabeth. Temitope, I saw you, shifting forward, which means really you have something to share in this space as well. Could you please step in now and tell us on the success side of things, what has worked for you guys as a business, as an SME in Africa, in accessing trade finance, and how can we improve on it? Should there be challenges?
All right, for my own hand, what has worked is that is actually worth commending is the resilience in the SMEs. Despite the issues that a lot of us would face with financing, somehow we're still able to get the funds out. However, when these funds are gotten out, to share a quick story about what had happened to us some years back. We're looking to buy some produce from a neighboring African country. And we had done our due diligence around the company and everything checked out just fine. And the funds were transferred. However, months down the line, the produce had not been gotten. And at this point, we realized there was just something not right. So we then moved into to try to get our funds back. Unfortunately for us, we weren't able to get those funds. It was at this point, we also realized that if trade must work, there has to be some form of a credit bureau that documents financial crimes, that ensures credibility in the ecosystem, where we could trust each other. Despite it's not, getting the funds it's difficult by itself. But then to now lose the funds to some other organization who have also positioned as a credible organization, it then becomes disheartening. So yes, the connection among SMEs is great. You could go online and you could probably find 10 companies in Cameroon, in Ghana, or so many other countries that do what we need. But then upon getting into the relationship, how do we ensure that the trade could actually be credible? Another side of it that we've looked at is with currency transfers. Currency transfers, across the continent is difficult. Just listening right now, the mention of LC and some other forms of payment. At the moment right now, we're having an issue with LC because the customer we are trying to make payments to had come back to say, what, if you guys are going to use LC, you have to pay a lot more because of the so many charges that have to do with all of this. So there has to be a better collaborations between banks, across the continent, across the nations. How can we ensure that things work fine? How can we ensure that, even fast tracking standardized currency could be a very good one. We've heard of the ECHO, but then, how all of these things will go a long way to making trade, much easier for SMEs. So I'll stop there.
Thank you, Temitope. I think you brought out a number of very interesting issues. Currency transfers has been an issue, in trade, and I think we really need coordinated banking and also, very efficient settlement and clearance systems in Africa as a continent if we have to facilitate this kind of trade. I think that those are very, very important things, and I think the AfCFTA Secretariat will have, such kind of items on their agenda as well. And if not, we really need to push harder, to get these things going. But I think tying to that discussion and what perhaps Madam Elizabeth had shared earlier, which were the kinds of models and strategies they've used mostly for their, domestic supply chains with EML and Safaricom in Kenya. I think I want to bring in Mr. Kaima Panjira now as COO of the Export Development Fund, to speak from the export side of things and where you're involving more than one country. What kind of tools and models or solutions do you have or have you applied as Export Development Fund, Mr. Kaima Panjira, to facilitate SMEs? Let me just share a very, very quick and recent example. Only a few months ago, we saw Malawi signing a trade agreement with South Sudan, committing to trade or to export maize and other agriculture products from Malawi to South Sudan. That's a few months ago, but when I followed up with my contacts in Malawi, I learned that not much has moved in terms of volumes because of some of these challenges in area of financing and payments and all of this. Mr. Kaima Panjira, what and how are you addressing, some of these challenges? Give us a few practical examples from your end. Over to you.
Thank you so much, Dan. I hope you can hear me. Yeah, I think it's indeed true. As Export Development Fund, a development finance institution, this is typically a fund under the Reserve Bank of Malawi. Therefore, when it comes to export transaction, really our role is to provide a payment solution, but also as much as possible to make sure that we de-risk the SMEs. So indeed, in the particular case of the export transaction that we intend to undertake with South Sudan, we are actually playing our role as an export guarantee agency, where the intention really is to de-risk the SME, who is indeed anchoring the transaction between Malawi and South Sudan itself. A very, very small player actually in the market, the one that we have seen ourselves growing, but is actually now taking a position to do a very, very big transaction. So because of our because of the nature of our institution, we have also been able to bring in AfCFTA Bank, also to provide a payment solution. The intention here is that instead of Malawi taking South Sudan risk, we should be taking AfCFTA Bank risk. So AfCFTA Bank will actually make available an LC, which then makes this transaction much more attractive. As much as we provide direct loans ourselves as a means of intervention, but we have deliberately invited commercial banks to come in and provide such liquidity on the back of our grantee locally. That's to actually create much more liquidity to a number of players that are indeed interested to participate in this transaction. So in that case, if indeed the banks do not satisfy the liquidity requirements, then apart from providing guarantee ourselves, we can also directly provide the liquidity that is being sought. So through structured trade finance, Danny, to answer your question directly, we actually have a number of interventions, including pre as well as post-shipment financing. We can also have in place receivables programs, future flow financing, direct lending itself. But much more importantly, we're also flexible in terms of structuring specialized financing schemes. I would give you an example of fitting, where I would purchase an obligation that is falling due at some future date, thereby raising from deliveries of goods and services, some cash flows that we can finance against. Yeah, we can as well do financing, discounting invoices, but also vendor financing, where we are looking at a dual recourse facility through which lenders really may provide financing in support of buyers under a sale or purchase contract entered into with an identified vendor. So we see a number of structured finance schemes that we can do in order indeed to make available liquidity to SMEs. Thank you, Dan.
Thank you, Mr. Kaima Banjira. Before you go, and maybe to Madam Elizabeth as well, others will argue all of this jargon, just confuses us. What is it that you guys are doing, to just make this life easier for a small business? I mean, look at a $10,000, $20,000 turnover kind of business. How are you reaching out to them? How are you packaging this information, this jargon, to just make it easier for them to understand and maybe, trigger demand from those sectors? Can you share more about that? Maybe we start with you, Elizabeth, and we come back to Mr. Chifuniro Kaima Banjira in a bit.
So thank you very much, Daniel. In the SME domain and in ABSA Bank Kenya, we do realize that SMEs are not as organized as we'd want them to be. So what we've done different is that we reach out to them via campaign programs. Like right now we have a Wezesha campaign program where we go out literally to speak to different groups. We've partnered with various groups in Kenya, associations in Kenya that have already SMEs sitting in them. And we've said then that when we start the conversation, it's not so much to do with just financing. We are offering non-financial support. We bring it down to the language that they can understand. We bring them in smaller groups in the areas that they're comfortable in. So for instance, even for women, about 2 months ago, we went out to Mount Kenya area, which is really an area that is rich in opportunity as far as agribusiness is concerned. But then we broke the groups down into 250 people in a group, group and had conversations with them where they could ask questions. There was nothing that was left off the table. So that even terms that we use, sometimes we assume because the term that we've grown up with used in the banking fraternity, they don't understand. They had an opportunity to then ask. We then gave them opportunity to even break it down further and come into the banking domain, where in the banking halls, where we journey with us. Let's give you financial support. So we would then bring in, for instance, conversations around, can you hear me?
Yes, we can hear you, Elizabeth.
Yes, we can hear you.
Thank you. Sorry, everybody sort of like froze and the technology. So one of the things we did was we broke it down so that we can have more intimate conversations. And we encourage the SMEs to, before you need financing, let's partner where we speak one language so that you understand what we're looking for. We help you prepare. We speak about cash flows. We speak about how do you make sure you have, are you finding such opportunities? What does a bankable solution, proposition look like? When we had that conversation, it really helped because thereafter, the propositions that we come are more in line with what we're looking to support. And we've also provided both secured and non-secured facilities. So we've told them what we need in a language that they can understand. So what I would say for a lot of organizations is if you're looking to support SMEs, you must speak their language and you must help them understand what it is that you're looking for to ensure that you have a more bankable solution. And over time as AfCFTA, we've then said, what are the things you need support in? And the support then they've told us is a number of things. So for instance, they've asked us, how do we make sure that our cash flows are good? What are cash flows? What does a business continuity plan look like? What support can we get from a bank? And we've spoken to them in webinars over a period of time. So what I'd say is, if you're looking to go into that domain, it's not just a one-hit wonder. It must be a conversation. It must be a journey where you edify the SMEs to make sure that at the end of the day, they have a bankable solution and you can be able to support it based on the information that you supported them with.
Thank you, Elizabeth. No, thanks a lot. Quickly, Chifuniro, do you have one word or two to add on that? While you're coming on, could I encourage the panelists? There are questions that have been thrown in the chat box. Let's try to start responding to some of those questions on the chat. I will ask some of you to speak to some questions, but we can already start. Chifuniro?
No, thank you, Danny. I think the last one for me really is to say that there is indeed a significant mismatch between what I would call supply of capital and the requirements of African businesses in terms of financing instruments that lenders really do employ. I would want to say that the existing financial institutions, and I am calling financial institutions, but these include investors, lenders, and we can call them capital suppliers, are really not equipped to address long-term investment needs of African businesses, particularly SMEs. This is our own perspective as a DFI. So firms really in Africa, with similar growth opportunities as firms in other developing countries, are really more dependent on internal funds and are more credit constrained in terms of accessing external financing. So in many African regions, really, due to the high interest rates or returns from debt instruments that most investors, including DFIs, unfortunately, prefer to utilize short-term instruments in order to create more availability of debt than equity. So by this, Dan, what I'm trying to say is that we have all used debt instrument, in other words, loan, as a solution to assist SMEs. Unfortunately, it may not just be a loan, yeah? And indeed, if we want the SMEs to grow. But unfortunately, as investors, we don't return as suppliers of capital. That is why a debt instrument is much more attractive. But I would want to point out that national DFIs could be in a better position really to assist SMEs to get to a platform where they can easily be assisted by commercial banks. The reason here is that DFIs, due to their nature as policy institutions, they would need to put in place a deliberate policy assisted by their governments, making sure that SMEs really in specific sectors are particularly de-risked and therefore attractive enough to commercial banks, and therefore they can get the capital that they need. Thank you so much, Danny.
Thank you, Chifuniro. I'll also, ask you to look at the chat box. There are a number of questions that are coming from our listeners and participants that you can address. I think a couple of them addressed to ABSA Bank, and maybe one or two to you, Mr. Kaima-Panjira. But at this point, I wanted to bring back Madam Rose Mutuku, if we still have her. I think her earlier intervention really was, a call really to do things better. Do you have a direct question, Rose, if you're still there, for either Mr. Kaima-Panjira or Elizabeth from ABSA Bank? What would your question be to them? I mean, you're facing them today on this panel. Can you speak on behalf of your fellow SMEs, Madam Mutuku? Are you
Sure.
there?
Thank you. My question is to Elizabeth, and thank you for giving me this opportunity again. I know that I also bank with ABSA Bank. We have a couple of webinars that go on, but really, is there one of the bank staffs or the credit staff that really sit in these webinars to understand SMEs? Because sometimes you feel like, yes, the webinars are there, but when you go to your branch, some even don't understand what the headquarters is doing. There's a bit of disconnect there. So we need to see that exactly what we are talking about in the webinars, exactly what the banks are promising to do, is also trickling down to the branches that we operate with. Because even if you are a long-term banker, you bank with the bank for a very long time. When it comes to, we feel like they're happy to take our money when you're banking, but when it comes to lending, then we have a different conversation as like we don't know you. So I think we need to start, as much as we understand the language of the bank needs to really come down and integrate their staff within whatever plans they're doing from the headquarters all the way to the branches. I just say that I'm happy with Kaima-Panjira. I have pronounced the name right. Yes, we need to capacity build the financial institutions. For us today, we are trying to go to more of what you call patient capital and microfinances. Microfinances actually understand us better, but the challenge is their finance is so expensive, but I can actually bank on a microfinance without having a lot of issues, because they'll always come down there. Though they are expensive, they actually get you to move to the next level. Thank you.
Thank you. Elizabeth, I see you're coming on now, and maybe
Yes.
you could also address quickly the question in the chat box. One which I'm reading is, what information systems do banks base themselves on for price discovery to finance agricultural transactions where the ag markets are very opaque today? So I think that's something that you could also share. And I think make it quick because I'll ask Eva and Temitope to just also weigh in on, how can SMEs really come together and put together a strong, voice engagement with, banks directly. Are there any such fora? Are you doing anything as World Union of Wholesale Markets, to engage banks on a regular basis? So let's start with you, Elizabeth, in under 1 minute, and then Eva and Temitope, another 1 minute before we ask our Vice President to close us. Thank you.
Daniel, you really push a tough bargain, speaking in 1 minute over something again that really requires time, but I'm really going to try. And then encourage people, even as we have the chats, reach out to us, because we've given our contact so we can have longer conversations. So, Madame Rose, I hear you 110% in terms of how do we make sure that everybody is speaking the same language. And I think in an organization like ours, where we've started the journey of speaking to SMEs, it has become paramount that we have these conversations as frequently as possible. Now, whereas you might speak to the branch, whichever branch it is, and I'm happy to have conversation with you after this, just to make sure that you have the rights to ensure that you're getting the support that you require for whatever it is that you need. Now, you know, the SME journey, like I had mentioned before, is a journey that we started about 3 or 4 years ago in ABSA Bank as we moved from our traditional Barclays brand into the ABSA proposition and into the ABSA brand. So this is also new, but it's a committed and you know, conversation that we want to have with SMEs. So never feel that you haven't gotten enough. They're always, you know, the next channel that you can reach out to. I am available to have a conversation. We've provided, you know, the head of SME, the head of agriculture. We have specialists even in that domain where we can provide you with better education or support or conversations to just make sure that we've fully understood what it is that you require. And it's a journey. You rightfully say it is something that we need to continuously uplift and make sure we're getting it right. I hope then you can be able to interact with us and ensure that we can, as ABSA. Very briefly on the question that is in the chat, what information systems do the banks use? Now, traditionally in the Kenyan domain, we've always used fixed pricing that had been for a long time governed by the Central Bank of Kenya. And then, you know, in the past year, we have opened it up. So we are in the process of making sure that we can go into almost risk evaluation of each and every partner so that we can give you the price that is allocated to the risk that we see in the individual organization. But this again is a journey because that's something that we have spoken about. We are trying to look at the parameters that we need to look to so that we can be able to evaluate you better. You know, that's the reason why we spoke to things like value chain, so that we can try and help, you know, from a corporate perspective. How can we, you know, use their risk? How can we then also bring in companies or big organizations that can support us in risk mitigation? So there's a lot of things that we are trying to do to just make sure that the pricing is fair. But suffice to say, in the Kenyan domain, again, you know, I don't think many banks want to go back to traditionally where we were at 30 or 35% in terms of interest. Right now, it is down to, you know, double figures, about 13, 14, 15%, but with a lot of room to improve in terms of risk, you know, providing better pricing for our customers in the domain. So work in progress, I would say.
Thank you, Elizabeth. Temitope, any quick, you know, last words?
Yeah, so yeah, sure. So as SMEs, the truth is we must continue to improve ourselves. The knowledge base in terms of all of the services, we must continue to grow it. And then we must, you know, we must form a united front. If we're going to win this battle, we're going to win it together. You know, and we must continue to engage with policy formulators. We must continue to engage with the government. You know, we must continue to do all we can. You know, the future is very bright. You know, and with the growing population, with the various opportunities coming the way of SME, you know, we could definitely see a lot of light at the end of the tunnel. Yeah, thank you, Daniel.
Thank you, Temitope. And Eva, you have 30 seconds.
Yes, I just wanted to say that I think that one of the key factors of success for SMEs is not to be alone, because union, as you know, union makes us stronger, and regrouping in communities helps us improve the support, improve access to information, and that's what we're trying to do at World Union of Wholesale Markets. We're trying to provide a platform, and one of our missions is to share experiences and provide technical supports for our members, share best practices, and I think that this is how we can improve how said my predecessor just said, to improve our knowledge, collaborate with banks, help maintain the dialogue, and develop more proximity with financial institutions so that we can better understand each other and better collaborate.
Thank you so much. Vanessa, I'm so sorry I took away 4 minutes from you. Please, I know you speak very fast. Close us out. Thank you so much.
Thank you, Daniel. Thank you all so much. This has really been a fantastic session, and we're so pleased that all of you could join us and kick off this amazing week of the African Green Revolution Forum Summit in Nairobi. I can tell you live from the center and the hub here, there are already 6 sessions going on. We have over 5,500 registrations for the week, in case you didn't know that. But I do want to come back to this opportunity of scaling the integrated market in Africa. And I'm going to just go through, there are 7 key points to integrating the markets and scaling finance in Africa. And I don't want to let this go, Daniel. Governments and private sector are not at odds. We're working hand in hand. That's number 1. And we've heard it from everybody. If the government is supporting the private sector and vice versa, and there's an open communication and dialogue, that's where leverage and scale and impact is going to come. And I don't mean national only, I mean regional and continental. The advocacy, the clarity of what the private sector's constraints are, updated filing, troubleshooting, let your people know, let your local governments and national governments know one way or another. Part of the WTO requirements, all of the governments in Africa have been starting to update online reporting systems and mechanisms. And the private sector can use those mechanisms to report constraints and barriers. The last thing I want to say is that it's all about partnerships, and partnerships generate more profit, more scalability, and more return on investment risk mitigation schemes, whether it's with your investors, your buyers, your business partners, your employees, your suppliers. In the end, we're all here to see the impact at farmer level, and that is incomes, and we want to see zero hunger. We're completely committed to seeing the impact scaling in terms of transformed food systems, and without which we all know we have 9 harvests left to get to 2030. We want to have all of you committing at each of your levels, and we'll be measuring and reporting and tracking on all those commitments. That's what we're here for at AGRA. So we look forward to seeing you all every day this week, and every session tweeting like crazy. I'll be right there with you. Thanks so much, Daniel, for all of your fantastic work and a great participation today.
Thank you so much, Vanessa. And thanks to all of you, our panelists. You've been wonderful, and all of our participants out there. I hope you enjoyed our session. Please keep engaging with us on the deal room and join the sessions that follow. Thank you and have a good one.
Thanks so much, Daniel. Bye-bye.